Now, in business news, the $8.8 billion merger between Chemist Warehouse and Sigma Healthcare has been approved by the competition watchdog this morning. Joining me now is business reporter Edward Boyd. Hi there, Ed. The ACCC has been assessing the merits of this deal since March.
Yeah, look, this deal has been bubbling away for some time. It was first announced in December last year. Sigma Healthcare is listed on the stock market. Chemist Warehouse is a privately owned company. Obviously, they're two really large businesses in the healthcare and pharmacy segment, and there were concerns that the merger between them would lessen competition in that healthcare market. But the ACCC has taken a look at it. They've spent quite a few months assessing the merits of this deal, and this morning they've given the green light to approve the merger between the two businesses. So it is going to still require, obviously, shareholder approval from Sigma Healthcare, but once this all goes through, it'll probably happen over the next few months or so, we'll have a new business listed on the stock market worth about $8.8 billion. It'll basically be Chemist Warehouse with about 85% of the equity, and Sigma Healthcare shareholders will have about 15% of the equity. So this has been a big thing that's going to really change the way healthcare is delivered to Australians. The big concern really was that Sigma Healthcare is a big pharmacy supplier, and Chemist Warehouse is a pharmacy retailer. And it would have potentially lessened competition with Sigma Healthcare selling to other pharmacy-related businesses. But the ACCC thinks that's not going to happen, and they've given it the green light this morning. We should hear from the head of the ACCC a little bit later today, commenting on the deal. Chong Lei.
In banking news, the NAB has reported an 8% slide in full-year profit, down to about $7 billion. Was that in line with forecasts?
Yeah, that was in line with forecasts. And remember, NAB is the biggest business bank in Australia, and they didn't lose any market share in the business side of their business. It did very well. The home loans business, though, the retail banking sector, went down about 19% year on year, according to NAB's results posted this morning to the stock market. You can see cash profit about $7.1 billion. Net income was only down by 2% to about $20 billion. The net interest margin was reasonably steady, only losing 3 basis points, and they lifted the final dividend up to 85 cents per share. Here's a quick grab from the Chief Executive, Andrew Irvine, who I'm going to be speaking to later today. This was supplied by NAB this morning.
The economy is tough, particularly in Southeast Australia. We know small businesses and personal customers are struggling. That being said, because we have high levels of employment and low levels of unemployment, most are getting by. They're not enjoying it. It's tough. Often we're hearing from our customers that they're having to take a second shift or take a second job where possible.
So I'm going to speak to Andrew Irvine a bit later this afternoon. We'll play that on Business Now at 4:30 p.m. Chong Lei.
Thanks so much for that, Ed. Looking forward to that interview.